Hello, everyone. Good morning, good afternoon. We're going to start in about 1 minute or so. Let a couple more people trickle in. If you want to go ahead and put in the chat, maybe where you're calling in from. Always interesting to see. Good to see many familiar names in the chat. All right, 9:01. I'm going to go ahead and get started here. For those of you who have not yet met me, my name is Martha Lacritz-Pelletier, and I manage the NGOsource program at TechSoup. I am an attorney, and this is a topic near and dear to my heart, and one that we get a lot of questions about. So I'm going to move relatively quickly through these slides, mostly because I really do want to leave room for discussion and questions at the end. In the meantime, you're welcome to put questions in the chat or save them until the end, whatever is easiest for you, and we'll do our best to answer all of them. I'll also share my email at the end so that I can separately address any questions you may have. And for those of you that know me, I love getting your questions. I love talking through these issues and supporting different kinds of funders and their grantees. So tipping out of public charity status. Let's talk a little bit about what that is, how to identify it, how to mitigate potential consequences from an organization's tipping out of public charity status. So our regular legal caveat here, the information and materials provided in this webinar are not intended to constitute legal advice, and you should talk to your specific counsel. And I do want to note that this is important not just as a standard caveat to provide when we present on a legal topic, but also because decisions about how to mitigate or respond to an organization's particular situation are really dependent on individual circumstances, as well as your organization's particular risk tolerance. So just because something may be permissible under the law doesn't mean that it makes sense for your organization or that your counsel may think that's the best strategy at any particular moment. So I do want us to think about this in that larger context, particularly given all of the nuances involved in the public support test and in tipping out of public charity status. So quick rundown of what we'll cover. What is public support, which is the underlying concept under tipping? How does it apply to U.S. and non-U.S. grantees? What is tipping? Who is at risk? What can be done to prevent or mitigate tipping? What are unusual grants, which is one of our most utilized avenues to address potential tipping, so a really important one to understand. And then we'll share some useful resources and examples. We will also be sharing these slides after the event. You'll see some of them are somewhat dense, and the reason for that is because I want to make sure people can refer back to it and dig into some of the issues that I won't be able to dig into today. All right, so what is public support? The public support test is a mathematical equation that looks at whether a charitable organization is funded by a diverse enough set of donors to make it what the IRS considers accountable to the public versus being accountable to a single or small number of private donors. And this test is what distinguishes 501c3 private foundations, grant-making foundations, and from 501c3 public charities. So the way that the IRS looks at this is if you have sort of a guaranteed funding stream from an endowment or a family or a company or a very small number of donors, then the IRS considers this to be not inherently accountable to the public because you don't have to go to the public to raise money. Whereas public charities typically, and we'll talk about some of the exceptions here, are actually required to go out and fundraise, get government contracts or grants, find donations from individual donors or from foundations. And it's important to understand that the rules for equivalency determination are based on the rules for charitable status in the US. So they are literally the same rules. The Treasury regulations defining foreign public charity equivalency just refer back to the regulations that define the public support test. So it really is the same issues. The differences really arise from how it impacts them in different ways and how they may be approaching it differently. Given our limited time today, again, I'm not going to go into great detail as to how the public support is mathematically calculated, as it's a pretty complicated test, but I will share some of the high points as well as resources later so that people can dig into that. So do all organizations have to demonstrate public support? The majority do, but not all. Certain types of charities are not required to meet this test because the IRS considers them inherently accountable to the public by the nature of their activities. Those are religious institutions that have congregations, regular bodies of individuals who meet to worship. They're defined in the tax code as churches, but it refers to any religious institution. Schools with a regular curriculum and a faculty, hospitals, as well as medical research organizations, which is a defined type within hospitals, supporting organizations who exist purely to support another charity or charities, and those are relatively infrequent, but that includes things like the development arm to a university, say a university foundation, whose sole purpose is to fundraise on behalf of the university. And then government instrumentalities, which are technically not equivalency determinations because they're legal opinions where we find that an organization is actually a foreign government instrumentality. So none of those entity types actually have to meet a public support test. We are not required to request or review their income data. Instead, each of them has a unique test that the IRS uses to demonstrate whether or not they feel they actually meet one of these categories. So let's take a look at where you can find the public support test in the Form 990, which is, of course, the filing that public charities, the tax filing with the IRS that public charities file. Foundations file the 990 PF, public charities file the 990. And a couple things to note about this form. This is the Schedule A on the Form 990, and we'll do a deeper dive on it a little bit later. But a couple things I want to point out is you will not be able to see from the 990 whether the organization had large private sources of income that may be bringing down its public support. That is in the Schedule B, and that is not part of the public filing. And some of you may be aware over the years there have been a number of lawsuits around whether or not this information should be made public. But at the moment, it is still not a public document, actually listing who the donors are and the amounts they gave. So you have a limited view on how their public support may be impacted by individual donors. Also note that the Form 990 asks for both the prior and current year's public support calculation to ensure that the organization did not fail the test 2 years in a row. That's at the very bottom of the page. So organizations undergoing ED don't actually have the luxury of sort of failing 1 year and then testing again the second year before we determine whether or not they qualify. And that is because they're not annually filing. And so the IRS doesn't have this sort of 2 year in a row vision or a tax practitioner who's preparing an ED. However, this is actually the reason that organizations undergoing ED have up to 2 years following the close of the fiscal year for the validity period of that ED. And the reasoning behind that is the IRS says, well, if an organization in the US technically has 2 years during which it can fail 1 year the public support test and meet it another, then an equivalency determination should also be valid for a full 2 year period. Okay, this is what the public support calculation looks like. We're zooming in, so you're not seeing the entire sheet, but this is sort of the meat of how the public support calculation is demonstrated on an ED with NGOsource. What you'll see here are a few important calculations, and this actually sort of breaks down how the calculation is conducted. But what you'll see on the first part is the total public support, which does actually include large private donors. And then you have a number of other categories. It calculates the total support, this 2% figure, which is essentially what you measure, how you determine whether or not a large donor, what we call a major donor, needs to be separately reported on. And then we have the list of the donors, the amounts given over the applicable 5-year period, and in the donor type, which helps us determine whether or not they are subject to this 2% limitation that would impact the calculation. Major donors. This is an important category, and this is actually gives you a screenshot of what we provide underneath the sheet that you just saw, which defines what a major donor is. and how that impacts the public support calculation. So I've put in here underneath this good sources versus bad or neutral sources. So the higher amount of government tax levies, government services or facilities donated, or small gifts, grants, contributions, membership fees, as well as large public donors, which include governments, U.S. public charities, or a public charity for whom we have an ED on file at NGOsource. This is a big advantage of the repository model is we have insight on so many different organizations that there may be a foreign organization that we're able to say it is equivalent to a public charity because we've already made that determination. And so that enables us to treat those as public sources of support. We see that often for large intermediary organizations, like Mama Cash is a great example of one, a common major donor. Sort of bad or neutral sources. Again, it's bad only in terms of it lowers the public support, is investment income, unrelated business income, or large private source donors. Now I have in here gross receipts from mission-related activities. That number for most public charities is actually just removed from both the numerator and the denominator, so it has no impact on the public support either way. So what are the thresholds for qualification? So once you review the public support, how do you determine what to make of it? There are three potential outcomes. The first is the organization's public support is at least 33.33%, 33.333333. That means the organization is publicly supported and you are done. Outcome number two, if the public support is less than 33.33%, but at least 10%, then the organization typically can still qualify as long as it can demonstrate that it acts, walks, and talks like a public charity. This is what's known as the 10% facts and circumstances test. Again, this is something that we often utilize for our EDs. And on the Form 990, it is also something that is spelled out in the Schedule O additional to support the Schedule A. Demonstration of its public support. And there are a number of questions there that truly are just asking, is this basically a grant-making foundation, or is it a foundation, an organization, a charity that's going out and doing the kind of things that a public charity would do, like fundraising, like having a board that isn't entirely made up of, donors or family members? Does it go out and provide services to the public, or is it really just making grants? And an organization almost always able to qualify to meet the 10% facts and circumstances at NGOsource, because these are typically charities. They just happen to have low public support, not because they were set up to act as grant-making entities. So for purposes of an equivalency determination, as long as it has 10%, we're very likely going to be able to qualify it under the public support test. Outcome number three, public support percentage is less than 10%, even 9.99999. That means the organization fails the public support test. And at that point, it is not equivalent to a public charity, but it may still be a charitable organization. And in that case, it would be essentially a private foundation. So what is tipping? This is when an organization suddenly drops below 10% of public support due to a single large grant or series of grants. So an organization, a couple ways we see this. Possibly an organization is just fine, its public support is very high, and then one year it does really well because it receives, 2 grants from 2 different foundations, but that becomes 80% of its revenue. Or it receives, a couple of donations, all from related family members or businesses, and that suddenly tips it, makes its public support drop from, say, 60% to 9% or something like that. The other way that we see this is it happens over a period of time. So maybe one year an organization's public support is 80%, and then the next year it goes down to 60%, and the next year it's 40%, and then it goes down because the organization just is struggling to diversify its income and potentially continues to receive income from the same sources or single source. In those cases, you can start to see it in advance, but you still may not be able to control it because an organization cannot necessarily determine who gives it money. Again, I do want to note that because an organization's public support doesn't impact the way it is organized and operating, tipping basically results in the organization defaulting to 501c3 private foundation status. So that is what happens in the US. For purposes of equivalency determination, a denial is that essentially it looks more like a private foundation because it doesn't meet public support. It is fully still a charitable organization. In this sense, I'll also mention that for those funders who are exercising ER, expenditure responsibility, because an organization failed on public support, an ED can still be helpful because it demonstrates fully that the organization is charitable, and that can help you, for example, for your pre-grant inquiry and other documentation it gives you that assurance that the funds are going to be used for charitable purposes, even though you still have to exercise expenditure responsibility. This is a diagram I put together actually a few years ago, but it doesn't change much. This actually shows the breakdown of organizations within the NGOsource repository that we review. And what you'll see here is over 80% are public charities subject to the 509A1 public support test. So the public support test that I'm talking about today is under the tax code is the 509A1 test. At NGOsource, we frequently refer to it as PS1, so public support test 1. And I haven't been able to locate a similar set of figures for US charities. I suspect it would be quite similar. Your 509A1 public charities are essentially the vast majority of charities that we work with at any given moment, whether it's the Red Cross, a food bank, an animal shelter, a think tank, an organization providing human services in some way, an educational organization that isn't a school. That is the vast majority of public charities have to go out and raise funds from the public and meet a public support test. You'll see the breakdown then shows, a higher, almost 10% that we review are actually schools, and that includes universities, elementary schools, as well as educational programs that may not be traditional schools, but still include courses and curriculums of some sort. After that, government entities are more than 5% of what we review. So again, those are not technically equivalency determinations, but we issue an opinion that an organization is a foreign government agency or instrumentality. And essentially that means you don't have to exercise ER on it as long as you restrict the grant to charitable purposes, since it is a public agency. And then we have hospitals, a little bit under 1%. 509A2, which I've referred to here as PS2s, that I'm not covering today, relatively uncommon category, but that refers to entities whose primarily earn their income through earned revenue for services or goods sold. So some classic examples of that include zoos sometimes, or symphonies, or organizations essentially that primarily subsist on ticket revenue, that may be museums, sort of entrance fees or other earned revenue of that type. Many of those organizations do also qualify as 509A1 public charities because they receive ample grant income. So then we have also supporting organizations, as I mentioned before, and hospitals. So they make up a relatively small percentage, but overall, still almost 20%. And those organizations, again, as I mentioned before, do not actually have to demonstrate public support. Now, PS2s, 509A2 organizations, the income, that revenue, that generate earned income, do meet a very unique public support test, but it looks at the diversity of not donors, but payors for services. So it is less impacted by the same sort of tipping issues. So let's look at who then is at risk of tipping. So we already know that there is a category of organizations and several categories of organizations that are not at risk of tipping because we don't have to review their income data. For the other 83% of organizations that are at risk of tipping, there are a couple of categories that we see most commonly. And those are charities who rely on funds from a few large donors only. One of the places that you will see these are corporate foundations. And I call this one out here really primarily for non-US charities. While in the US, corporate foundations are almost always private foundations. Other countries don't typically make this distinction. So at NGOsource, we do occasionally see organizations coming in for review for equivalency determination who are a little bit more like traditional foundations, in the sense that maybe they were set up by a company or a family, but in their country, they are equally a charitable organization. But by the time they come to us, we see essentially that they're funded by a single funding source. So those are ones that you may think about if you are putting through an organization for equivalency determination, and say it's the XYZ Business Foundation. That may be something you want to double check before you submit it. Small charities who suddenly benefit from a large grant from a foundation or other private party. We do sometimes see that at NGOsource. They're in another country. They are suddenly benefit from a generous large donation from a foundation or an individual, and that could put them at risk, although we'll talk about some ways to avoid that. Non-US charities in general who are not familiar with this rule, I can tell you that been practicing in this area for 20 years, and I have never seen another country that actually that uses any test similar to the public support test. So this is really, if you're not in the US, if you're not a tax law attorney, you probably don't have any idea that this rule exists or know how to maybe potentially prevent it. And then I'll point out here that potentially at this moment in time, sponsoring organizations to donor-advised funds are considered public support, but the IRS in 2017 actually issued a notice defining some of the measures it intends to take regarding how it regulates donor-advised funds. And it has since issued rules for half of those recommendations, and the other half are supposed to come out this year, but we'll see whether the IRS is well enough staffed to actually do that. But essentially, they have signaled that one of the rules they plan to enact is an organization, a donor-advised fund that gives to a sponsoring organization will no longer be treated as a source of public support, that the grantee would actually have to, in fulfilling its public support calculations, it would actually have to look through the sponsoring organization and count the donor as the donor advisor. So this was something that could ultimately impact the number of organizations that are able to qualify. We don't see too many that are largely supported by a donor advised fund, but we do see them occasionally. And when we do, we will include a notice to the funder just saying, this is a rule that may come to be eventually and may impact this grantee. We actually also submitted a letter to the Treasury Department when that notice came out in 2017, explaining why we think this is unfairly harms non-US charities. So moving to the next slide. What can NGOs do to prevent tipping? And as I noted, unfortunately, avoiding tipping may simply be impossible for a number of organizations since they can't actually control who gives them money and who doesn't. Most organizations don't want to be in the position of not being able to diversify their funding. Most charities are deeply trying to find ways to diversify their funding. So I want to emphasize that if an organization does tip out of public charity status, it is neither its fault nor something that should reflect poorly on it in any way. So having said that, some of the things that we often advise is NGOs should learn the rules, discuss their concerns with funders when appropriate to solution them together, seek ways of diversifying their income. We actually do have some good resources on how to do so in our NGOsource Learning Center that I'll point to later as well. We also include there essentially some low-cost resources and donated technology that helps with fundraising for organizations outside of the U.S. As well as within the U.S. We have from TechSoup, we have a larger sort of collection of those resources as well. When completing the financial section of the ED questionnaire with NGOsource, always important for an organization to confirm that there are no missing income sources. And this is something that, if an organization goes through ED with NGOsource and we receive the file, the attorney receives the file, and the public support is very low, certainly if the public support is under 10%, we go to great lengths to make sure that the organization has not missed something or misunderstood. We never sort of receive a file and assume when they fail that is correct. It is very common. Some of the common things that we see are organizations may not include donations from the funder that is actually requesting the ED because they assume, well, they already have that information, so I don't need to include that. They may not understand that some of these more unique categories like government services or facilities provided without charge can be counted as public support. They may be misreporting who the major donor is. So for example, they may receive a grant through an intermediary who is a public charity, but they're reporting the grant as from the primary donor. So we do often advise on help them try to understand that. Sometimes they will also list as a single major donor, sort of an aggregate number of donors. So it may say sort of like donations from the board, and then they count the entire amount given from every board member. So then we sort of have to explain, no, that is not a single major donor. Those are individual donors, which can mess up the public support calculation. And then helping organizations identify and call out unusual grants, which is, again, a little bit harder for them to know what to do on their end, but it is something that on the NGOsource side, we are also always looking at. And we'll go into greater detail on what an unusual grant is in a moment. All right, what can funders do to prevent tipping? Somewhat similar, work with the grantees to understand the rules, help them identify and correctly report income sources, as we do at NGOsource, provide fundraising advice, and track declines in public support. So we have a number of NGOsource members who do this quite actively. If they have a multi-year grant, they're very closely looking at whether the public support percentage is declining over time, because then they know they may have to start working with the organization to figure out how to offset that. Providing fundraising advice is actually a phenomenal resource that funders can do for organizations. I think this is one of the funders' superpowers. As funders, you're very connected with other funders. You can advocate for your grantees. You can give your grantees advice on how to approach foundations, how to seek funding. That's probably the number one resource request that we see from organizations is how do we fundraise better, right? And so I think that's the kind of capacity building service that funders can help advise their grantees on and provide sort of resources toward. Consider whether and when a grantee can apply the unusual grant exception. And part of that is for U.S. grantees, ensuring that the grantee has knowledgeable tax preparers. You may consider sharing a memo to the grantee to share with its tax preparers, just saying, we're giving you a large grant for the first time. We want to make sure you understand how this may apply to your tax filing, and then share it with their tax preparers. It may be a small charity that doesn't have a tax preparer and just absolutely doesn't know that the rule applies. It may be an organization working with pro bono counsel that isn't necessarily a tax exempt lawyer. So having that knowledge on hand can be really crucial, particularly for those U.S. organizations that are reporting on the 990. And NGOsource, as I said, we actually are very sort of honed in on when to use those exceptions. So fortunately, every one of our EDs does get that sort of extra attention. And if we can get an unusual grant exception, we will, which again, I keep mentioning it. I will talk about what it is in the next slide. Another thing that funders can do is to time grant payments to either be made all at once. So for an unusual grant treatment, if it's the first grant that you're giving to an organization, or broken up over time to spread out the impact. So this, you could really go various ways on this, and it's going to depend a lot on the individual circumstance, because in some cases doing one would actually be harmful, and in other cases it would be beneficial. So you have to look at how that would work. Remember also to note the fiscal year end of the organization, as the public support test is measured against the grantee's fiscal year end, right? So an organization that we're reviewing now that has a calendar fiscal year end, we're going to be reviewing income through December 31, 2024. However, if an organization is on a March 31 fiscal year, then we're going to be looking at information through March 31, 2025. So for example, there's an organization I was working on yesterday. It's on a February 28th fiscal year. And the organization submitted information through February 28th, 2024, didn't meet the public support test. We went back and asked, can you provide another year of financial information through February 28th, 2025 that just ended, so that we can test whether the outcome may change. So you do want to think about when their fiscal year was, when it ended, the information that you're looking at, and how that may impact the ultimate public support test. And that is because it's a 5-year test period, right? So it looks at the public support test, looks at the past 5 fiscal years of an organization. And when you change that fiscal year period, the public support is going to change as well, because certain donations will drop out of the test and others will be added when the new years are added. Finally, coordinate with other funders. This can be a really powerful tool that I know a lot of funders do already, which is sort of talk about, we're both giving to this entity, how can we coordinate this so that we're not unintentionally tipping it out of public support status because we're both giving in one year or we're giving in different years. You may think about their other sources of income, working with intermediaries that are public charities. Things like that can make a big difference as well. All right, so let's talk about this amazing unusual grant rule. So what an unusual grant is essentially the IRS and the Treasury regulations set out an exception for your charity. Your public support is fine. All of a sudden, somebody writes you into their will and you get this huge amount of money and you're suddenly no longer a public charity. That's sort of the classic, obvious example of an unusual grant. The idea is you shouldn't be punished if you've actually been out there actively fundraising and acting like a charity when suddenly you get a large grant, which we often refer to as an unfortunate consequence of a very fortunate event. So what the rule actually says in the Treasury regulations is a grant is unusual if it satisfies all 3 of the following criteria. If it's attracted by reason of the publicly supported nature of the organization, so it's somebody's giving the grant to it because it's a public charity and they want to fund it. In other words, not because they're creating a foundation to make grants. It is unusual or unexpected with respect to the amount thereof. So this is really important because you could get an unusual grant even if you actually applied for the grant, right? It doesn't have to be total surprise. Oh my gosh, I had no idea this fund was coming. Maybe you apply for a grant and that grant is suddenly 90% of your income. That can still be treated as an unusual grant because it's respect to the amount thereof compared to the other grants that you have received in the past. And finally, if the grant would, by reason of its size, adversely affect the status of the organization as normally being publicly supported. So there are a number of factors we look at. This is another kind of facts and circumstances test to determine whether or not a grant should be treated as unusual. And you'll see some of these pertinent factors to the right. Has probably one of the biggest one is, have you received grants from this funder before? If you receive $1 million, but for each of the past 5 years, you received 500,000 from that same funder, it's going to be more difficult to argue that this grant was suddenly unusual. You also look at other things like, has the organization been fundraising and does it intend to continue fundraising? So all of these things help us determine whether or not we can treat a grant as an unusual grant. Now, what does it mean if we treat a grant as an unusual grant? It means that we remove that grant from the calculation. And so it's treated as though that grant was not given during that time period. Um, it's a little bit more complicated than that, but suffice it to say, it would then a lesser impact on the overall public support. And this is an exception that can be widely used, even though a lot of practitioners either don't use it or are not aware of it. The Treasury regulations make this pretty clear that it's applicable even in situations where the donor may have a close relationship with the organization. There's an example in the Treasury regulations of a member of the Board of Trustees who makes a grant, and it's still treated as an unusual grant just because of its size. So on the Form 990, the unusual grant exception may be claimed and described without any kind of special approval from the IRS. So I have talked to tax-exempt tax preparers before who have said, we use this frequently and we've never been audited or tested on, questioned for it. So it is something that can be used as long as you can demonstrate that the factors are met. In terms of NGOsource's process, it is something that is the unusual grants, facts, and circumstances questions are triggered for an organization to respond to whenever its public support is low when it's filling out the online questionnaire. So it automatically triggers those questions where we believe that an unusual grant may be helpful. I'll also note that even if it's not triggered, we will always try to examine this, whether this is a possibility. If we see that there was a large donor, then we'll try to go down that track. Sometimes an organization fills out the questionnaire and they clearly had an unusual grant, but they still say, no, it wasn't unusual. We didn't have one. But then if we look at the actual public support calculation, then we will follow up over email and, sort of explain, you may have misunderstood. We believe this could be. So if there's ever a possibility that there is an unusual grant situation, then we will deploy it if it can save an organization's public support. And I should say, when you receive your ED analysis, you will also receive for an organization, if we apply the unusual grant exception, it's part of our legal analysis. We include the factors that were reviewed and why we made that determination. So it's very transparent in that process. Okay, let's turn to some frequently asked questions. Once an organization tips out of public charity status, can it ever regain that status? Yes, this is very important. So this is a more onerous process for U.S. 501c3 public charities. As I said, they have 2 years to potentially meet the test. If they fail 2 years in a row, then they actually have to go through the process of reapplying to transfer their status to public charity. And this is they do an online filing. They wait for a period of 60 months to see whether they can meet the test again. So it is more onerous. So you want to probably be a little bit more careful with those U.S. 501c3 public charities who then default to private foundation status. For non-U.S. charities, we're not determining that they're a private foundation. We don't have to put them through a 60-month process of waiting to re-show it. So it's a little bit easier for organizations undergoing ED. Now, another point I'll make that I've put on the slide here is for non-U.S. charities, you may actually have no way of getting around, say, the tipping an organization out of public charity status. And maybe your answer is, you know what, we know they're going to tip no matter what. We're going to give all the funds at once. And then at least we know that once that tips, once they, in a few years, they should again. Now, the benefit of that is, you're not going to have the negative outcome is not that they would have to reapply for public charity status with the IRS in the same process. The downside is, of course, that other funders are not able to benefit from an ED on them. So, obviously you want to avoid that from happening, but the consequences are slightly different. Once an organization tips, how long should you wait before putting it through ED again? At least 1 full fiscal year. And we also advise you confirm that the organization has diversified its funding in some way. And often we will work with an organization to sort of test to the extent that we can before it undergoes ED again, because we don't want it to just go through and have that be a denial once again. So we're always happy to work with organizations and their funders to sort of get a sense of whether or not it would qualify on its next round. If you make a multi-year grant, how long does the ED need to be valid? So legally, and we have a blog post on this on our website that we had an external attorney contribute for us because we get the question a lot. An ED only needs to be valid at the time that the payment is made. So this is important for tipping, but I will also note that this is one of those places where funders frequently have different policies around when an ED should be valid and whether or not they're even making a multi-year grant without having the ED valid throughout the term of the grant, even if the payment is made all at once. So I do want to make clear that this is the minimum requirement under the law, but I am aware that a number of foundations actually take a more conservative position. But what the law says is that you only need to have a valid ED at the time that the funds are being distributed. So for those organizations who are comfortable following what the law requires, if you have no way of avoiding tipping the organization, you may choose to just give those funds all at once, again, to ensure that the payment is covered by the ED, even if the grant performance extends beyond the ED validity period. Again, work with your counsel. I'm aware of many counsel who would not be comfortable with this approach, but I can confirm firmly that this is legally permissible. Again, for U.S. public charities, it would have more serious consequences because they would have to reapply for public charity status. All right, so what is the best way to determine whether an organization is at risk of tipping? Ask the organizations a few questions about its current revenue sources, how many funders it has. If it tells you we're funded by, for the foreseeable future, we will only be funded by a single individual donor, that's going to be a red flag. Whether it has received large grants from other funders over the past years, whether it receives grants from governments or other public charities, which again, at this moment in time include sponsoring organizations to donor advised funds. For U.S. organizations, you can also go in and review their public Form 990 to see what it looks like. Again, it will be at least 2 years old because of the time to file and the time that is publicly available. So that information may be outdated. We also have funders who have asked before, can we look at another donor's ED just to gauge the tipping risks? Of course, you can't, if you want to meet the special rule in the Treasury regulations, you can't rely on that ED to make the grant yourself. But that could be an interesting way to get insight into its financial situation. Although I will note that income figures, whether it's on the 990 or an ED, they are self-reported, right? So an organization is not submitting financial statements to the IRS, and they're not submitting financial statements to NGOsource. It is neither required nor something that we do, which is try to match up their financial statements against what they're reporting on the public support test. And the reason for that is A, it's not required, and U.S. charities don't have to do it. But B, there is really no way that the individual categories that are reviewed and how they're broken down in the public support test do not align with any classical financial statement. So there isn't really a way to clearly be able to look at a financial statement and say, oh, yes, the organization is going to qualify or not qualify. Again, unless it's a very obvious case, such as they just have millions of small donors or they have one private donor only. But the reason I note that the income figures are self-reported is that that could change over time if mistakes are found or new revenue sources are identified. So you just have to be careful about that. And this goes back to the point of helping organizations understand how to report accurately and what information needs to be included. So obtaining financial information directly from the NGO is just about an equal way to gauge their risk of tipping as it is from looking at another donor's ED, because in either case, it's self-reported. This is a question we get a lot, and I sure wish I had a better answer for this. Is there a shorthand test we can rely on to gauge whether an organization will likely pass a public support test? Like, as long as it has this number of donors, or as long as it has, this percentage of revenue over time, right? There are too many potential variables to provide this kind of shorthand test. You really have to look at things like the type of the funder, the year in which the funds are given, the existence of other revenue sources, how you classify that revenue, whether they're treating it correctly as mission-related income by earned revenue or as grants. Some of those can get tricky with government contracts. Is it a grant? Is it a contract? Is the funder can the funder be qualified as a public charity because it's already in the NGOsource repository or not? Was it given through an intermediary? So there are just a number of questions and nuances here that there really is no single test that you can sort of gauge an organization's likelihood based on a couple of small factors. So a little bit of a deeper dive on what you're looking at for U.S. charities. This, again, is the first page of the Schedule A on the Form 990. And I know it's small on the screen, but what you'll see here is line 7 is your 509A1 test, or your PS1 as we call it for non-U.S. charities. This is where that 80 or more % of organizations will qualify. You'll also see this is where they can certify that they're a church, a school, a hospital, a medical research organization, various other organization entity types that do not have to qualify under a public support test. But what you'll see here is line number 7 is your classic 509A1, 170B1A6 PS1, or public charity, publicly supported charity. This is a second page, which then where they write out their public support schedule, as I noted earlier. So You can see on the screen how they've broken up the revenue amounts, somewhat similar to the NGOsource spreadsheet that we share for non-US charities. This is a sort of a zoom in on the lower end of that. You can see here the computation of the public support percentage for the prior year and the current year. It asks whether they're above or below 33.33%, whether they met a 10% facts and circumstances test, and that's where you can sort of explain how they met it, the test within the 990. We also include that in our legal analysis, how the 10% public support test, whether and how the 10% public support facts and circumstances test is met. You'll see that included in any ED that relies on that test, which we do very commonly, actually. So this is again the public support calculation that you will receive with your equivalency determination. Similar, the difference. So we show the 5-year breakdowns and then the final calculation. Unlike the Form 990, you will see who the major donors are and how they've been classified, which again is very helpful for public support planning and potential tipping. And I've got to zoom in on this here. I shared earlier what the major donor classifications are, and also on this same sheet, what is not shown here, underneath it is the sort of the legend that describes what does it mean, what is GOVT, it's government, what is USPC, what is private. So we're indicating in each case how it's classified, and then that is calculated, measured into the spreadsheet calculation. So here, for example, National Academy of Sciences of Ukraine is a government entity. So government or public charity, yes, and therefore no 2% amount is applied, meaning that it is 100% counted as public support. So it is a good source of income that will help its public support calculation. Okay, so additional resources. I really want to direct people to our NGO Learning Center. It's something that we're quite proud of and that we share with funders and grantees quite a lot. We do have robust resources on our website. If you look in the upper right-hand corner, this is a screenshot from our website. Under Help and Discovery, you will see things like our legalese blog, FAQs for grant makers, resources for grant makers. But for NGOs here, we have our Learning Center. And I do want to point out that it is the Learning Center is created and continues to be populated in order to advise non-US organizations. So it is really, everything is multilingual. We have resources that are really intended to be as plain language as possible. Try to make it a little bit fun by doing things like quizzes and 5-minute videos and sort of snapshots of issues to help an organization understand these rules. It also includes information specific to undergoing the ED process. So you will see things like, a guide to filling out the questionnaire and, what you can expect, how you determine what some of the terms mean, how you navigate the online questionnaire. And we are continuing to translate new resources, add new resources. So this is something that we do update regularly. And how you get to it is, again, you go to the website under For NGOs, you go to Learning Center. And what I've pulled out here is some of the resources that are currently available that are specific to tipping. And as I said, they're really intended for grantees, but they are equally helpful for grant makers. So a number of our grant makers will also rely on this information as well. It's a great way to learn about the rules. Some of the examples here are, we do have an article explaining the public support test, we also have several articles not listed here on things like what are major donors, how you calculate major donors, how you understand them, how you differentiate between different kinds of income, how you classify what the income categories are, whether an organization may not be required to qualify under a public support test, how you differentiate between mission-related income and grants. So a lot of information about the financial test, again, translated in multiple languages. Then we also have an article that explains what tipping is, again, in the 9 languages shown here. We have the quiz is currently only in English, unfortunately, but we are looking to ultimately translate everything. And then, as I mentioned before, we do have a guide to donated and discounted fundraising tools and accessible to non-US organizations via TechSoup. A lot of resources also via TechSoup available to US charities, as I noted here. So that can be a great way to get access to more grants and fundraising tips. So as I noted, we will absolutely be sharing these slides after the fact. I am also always available to answer questions, to brainstorm with you or your grantees. Some of our funders will send their grantees to us to advise them on ways to diversify their funding, and we're certainly there to support. We want to demystify a lot of these concepts and help both funders and their grantees think about how they can avoid the potential negative consequences of tipping, or if they do tip, what do you do to sort of as a next step, right? So we're here to help with that. And I look forward to everyone's questions. So I am going to open it up. I'm going to start by going through the chat and answering some of the questions that have already come in, and then happy to take any more. All right, so I've heard about the 1/3, 1/3 test before applying the facts and circumstances test. Does NGOsource ever use this? The 1/3, 1/3 test, I am actually not sure what that test refers to. So Erica, if you want to elaborate, that would be very helpful. Or if someone else is aware of the 1/3, 1/3 test, I assume it's, well, I'm not sure what it means. So I would love to learn more about that and answer your question. Do you have resources to share? Yes, we did also share that, and Jonathan shared as well. Okay. Thank you for the shout out for the resources. What happens if an organization does not pass the public support test during the determination process? Is it automatically considered a private foundation, triggering out of corpus rules for private donors? This is an excellent question, Stanislava. I'm so glad you asked it. Okay, so for those who are not aware with the out of corpus rules, if a private foundation gives to another private foundation, then not only does it have to exercise expenditure responsibility because it's not a public charity, but it also has to exercise something known as out of corpus distributions. And this is a test that essentially requires that the funds are spent out within a 1 to 2 year period. So the purpose of this test is the IRS wants to be sure that private foundations are not just passing wealth between themselves without ever paying income on them, income tax on them. And so the rule requires that if a private foundation is giving to another private foundation, it has to apply this out of corpus distribution rule, which in addition to expenditure responsibility, has to get all the funds out, that they have to move out of the grantee foundation within a designated 2 year period. So I will also note that the out of corpus test also applies if a foundation is given to a public charity that it controls. So those are the two situations in which the out of corpus distribution requirements apply. And this is actually the main reason why, if an organization does not qualify for public support, but otherwise is organized and operated like a charity, we don't issue a determination that it is a private foundation, right? So that is something that, and the main reason is because if we're giving you a paper saying we've confirmed that this organization is a 501c3 private foundation, then we're essentially telling you have to apply the out of corpus requirements. All we're saying is it didn't pass on public support and it is organized and operated like a charity. Now, even though you're wondering, didn't you just say that that means it is essentially a private foundation? I did, but what we're not doing is confirming things like, would the organization meet the qualifying distribution requirements, right? So there is, arguably, we believe that if we're not looking into those other requirements of private foundations, then we're not necessarily telling you that it is a private foundation because we don't know whether it's meeting the other tests that would apply to private foundations. So all we're giving you is an equivalency determination that says it doesn't pass the public support test, it's organized and operated like a charity. You determine then how you want to treat that organization. And for most funders, it is beneficial to just treat it as not a charity, not recognized as a charity, but clearly organized and operated for charitable purposes. So again, something to talk about with your donors. But excellent question. And this is actually early in NGOsource's years, we would essentially say it's a private foundation. And because of this out of corpus issue, we stopped doing that because I think fairly, we actually don't know for sure that it is a private foundation. Okay. Ryan's question, would a multi-year grant be treated differently when qualifying as an unusual grant? Another excellent question. For example, would the year 1 payment be considered unusual, but year 4 no longer be considered unusual? If so, what if that grant gets renewed? Possible that the renewed grant also could be considered unusual. I love this question, Ryan, because it is something we think about a lot, and I apply it in different ways. So this is a facts and circumstances test, unusual grants. There are not a lot of rulings out there or guidance on how to apply it. In fact, almost none at all. So the way that we will typically apply it is we go through the various questions and we answer them in a best faith, sort of good faith interpretation. Typically, if a multi-year grant, so for example, if a funder makes a multi-year grant, but essentially the award is given in a single grant agreement and then it's spread out over 3 years, but the funder has maybe never given a grant in the past, then and it's large enough to actually sort of upset the public support percentage, then we can often be comfortable qualifying it as an unusual grant. Again, this is going to depend on a number of factors, such as how large it is and whether the funder has given to them in the past. In other cases, it's going to be easier it will always be easier to make the argument if it comes in one lump sum. But we have absolutely defended that an organization's usual grant is an unusual grant, even if paid out over several years. However, if the grant is sort of each year it's a new grant agreement or a new distribution, then entirely separate, then we wouldn't be able to rely on that on the unusual grant exception. If the grant gets renewed, less likely that we would also consider the renewal grant to be considered unusual. Again, it will depend on all of the facts and circumstances. We'll look at the impact and whether it meets those, and we'll certainly do our best to be able to defend that case if we believe it can be. Okay, Erica, a little more info on the 1/3, 1/3. Under this test, the organization must receive more than 1/3 of its support from public support. Oh, okay. So this is the 509A2 test. So yes, Erica, thank you for specifying. As I mentioned before, there are two public support tests here. There's the 509A1 PS1 test, which applies to over 80% of organizations. And then there's the 509A2 or PS2, which we refer to test, which is much less common. It's as I noted before, it's about under 1% of the organizations we review qualify under the 509A2 public support test, but we absolutely do apply it. To talk a little bit more about that one, this is the example I was giving where an organization I provided in which an organization is almost entirely supported by revenue that it earns, either for the sale of services or for the sale of goods that are directly related to its exempt purposes. So again, this is most commonly in the case of zoos, museums, symphonies, orchestras, as well as organizations that do sort of contract research. Essentially, the organizations are not primarily fundraising through grants, but they're providing a good or a service that is directly and substantially in furtherance of their exempt purposes. And those organizations qualify under a separate test. As you note, it has to have more than 1/3 of its support from a diverse number of payors for goods or services. So, and this test is even more complicated, quite a bit more complicated than the PS1, the 509A1 test. But for example, if an organization conducts contract research and it is paid to do that research, but it's doing it for only one government or two governments, it would not meet the 509A2 test because the 509A2 test in terms of payors for services does not differentiate between the kind of payor. So even if they're entirely doing contract work with the government, even though that's a public source, it doesn't count as a public source for purposes of 509A2, and therefore it would not qualify under 509A2. So it really does have to be a kind of organization that has many different kinds of payors. So again, this is why the case of like a museum or a zoo is most applicable, because you have each person is coming in and paying $10 or $40 to pay for their ticket, their entry fee, and you end up with 10,000 payors for services, which is considered diverse enough to meet the 509A2 public support test. I will also note that an organization that qualifies under the 509A2 test may be impacted by large contributions. They're less impacted, but if an organization receives, say, all of its income from a single donor, and then maybe half of its income from diverse numbers of payors for goods or services, they'll probably also still fail the 509A2 public support test. Really applies to organizations that don't receive a lot of contributions and grants from the public, or if they do, it's from a diverse number, but do primarily operate in a way that earns revenue for their activities. So yeah, it's a more complicated test. We absolutely apply it. It comes up less frequently. But we have tailored questions to it. Another thing quickly that I will note is new organizations. We have a great blog, and then I'll turn to the next question, but we have an excellent blog on our website about new organizations and how the public support test applies to new organizations. So as you may know, an organization that was formed within the past 5 fiscal years, we look at a combination of actual revenue earned for completed fiscal years and good faith projections of the income that it will earn on the coming years. And this is something where an organization can and should be optimistic about its fundraising diversification, because we're relying on those good faith projections to determine whether or not it passes the public support test. That in organizations that are less than 5 years old, we have to apply the facts and circumstances test, even if it's under 10%, because again, we're trying to demonstrate that the organization is very likely at the end of 5 years to meet that public support test. The 509A2 public support test that Erica was asking about, that relates to organizations that primarily earn revenue for services or goods, also has a facts and circumstances test that can be applied for new organizations, but they do not have a 10% facts and circumstances question. So for the 509(e)(2) test, you really have to meet the 33 and a third percent. You actually have to be above the 33 and a third percent. And there is no sort of 10% difference. So facts and circumstances test applies for new organizations. For 509(e)(1) organizations, it also applies for those with more than 10%, but under 33 and a third. For 509(e)(2) organizations who primarily earn revenue for the sale of goods or services, there is no 10% test. The facts and circumstances test only applies to new organizations. Okay, question from Courtney. Does the grantor have any obligation under the law to avoid knowingly tipping a public charity? This is a great question. There is no current obligation that a funder would have to tip a public charity. There are obligations, as you know, that when you get an equivalency determination, that if you have information to believe that an organization should not be qualified, that would impact your ability to rely on the ED. But that doesn't necessarily mean that by giving this grant, we think that in the future it may tip the organization. That is not the same thing, right? Because an equivalency determination is looking at a status of an organization at a past moment in time. And it is valid for a 2-year period precisely because the IRS allows that for US organizations, right? So just because you think a large grant may tip them in the coming year, you're not then obligated to assume that the ED is no longer valid, both because you have a 2-year period under US law and because you don't know what other funds they may be coming to them. They might receive a large number of public grants at the same time. So absolutely, we strongly take the position that you are not somehow required then to no longer rely on the ED or to assume that the ED wouldn't be valid just because you are making a large grant in the coming year. Stanislava, you mentioned that you occasionally do foreign equivalency determinations for government instrumentalities. Yes, I thought a funder could determine government status independently based on publicly available sources. Is this something an attorney or CPA should be doing instead? No. You are absolutely right. You can absolutely make that determination on your own. The most common situation in which we determine that an organization is a government is situations where it is a public school, for example, or a public entity that is not could potentially qualify as a charity, but actually isn't able to qualify. And so then we will make a government determination. So the majority of our government determinations, we do see things like municipalities, very obvious governments that you could certainly sort of make that determination in-house on your own. But the majority of them are public schools. And so these are entities that we're always going to first see, can we qualify them as a school under 170B1A2, which is educational organizations that don't have to meet a public support test. But if we're unable to do that, then we will issue a government opinion because it's sort of the closest we can get to an ED, and if we believe they still qualify. And that is, again, most commonly in public universities. Sometimes public hospitals, we will issue those as well. And those are situations where it gets you almost to the same place if you have a government opinion. Again, the primary difference is that you have to restrict the grant for charitable purposes, which is why we will always first try to qualify it as a public charity. For things like public schools, often it will be a very old university that was created by royal charter and therefore has no dissolution clause or has none of the typical rules applied to it regarding public charity status. And in those situations, if we're unable to actually demonstrate that it qualifies as equivalent to a public charity, then we will sort of go the government route. And our online questionnaire will also trigger government questions in those situations so that we have the information available to make that determination. But as I said, we will always first try to qualify it as a public charity. If it's very evident from the funder's end that this is, say it's a municipality, say it's a city, say it's a ministry, the Ministry of Justice, you want to make a grant, then you don't have to go through equivalency determination. You can make this determination on your own. All you have to do is defend it on audit. And it's pretty obvious from certain entities that they're government entities, so you would be comfortable doing so. So the other situation is some funders just like to have a more conservative buttoned-up approach and have that opinion on hand so that it shows that we have done that, made that determination. But I will often tell funders, if it's so clearly a government that no one would question it, there's really no reason for you to go through us to get that opinion. And thank you, Jonathan, put in the chat that we will follow up with a recording of the webinar. Thank you for putting my email in the chat as well, Jonathan. We will be sharing the slides and always available to everyone, whether or not you're an NGOsource user or grantees, whether or not they've undergone ED. We're happy to talk with them. This is part of our mission. And I appreciate the kind words. So happy to do this again. Also happy to do individual trainings for any of your organizations. If we can help support you, if you have staff that you feel would benefit from this kind of sort of more personalized training to your particular situation. Again, not legal advice, but very happy to do that. Happy to work on sort of flow charts and things like that that can sort of practically help you make these determinations. I will note that I did this training a few years ago for our foundation, and somebody had pointed out an article to me that it was written by a well-known practitioner that essentially says tipping is not an issue. No one should worry about it. And I was shocked to hear that. I will say that, as you probably know, because you're attending this, it is an issue and you do have to look out for it, but we're here to help you support how you can avoid that. Daniel, we will be sharing a recording of this talk. We'll also be putting a recording on our website, and we'll share the link to that on our next monthly Grantmaker newsletter. So if you're not signed up for our Grantmaker newsletter, please go to the NGOsource website and sign up to receive those newsletters. Otherwise, you can check on our website for when it's available. And everyone who registered for this will also, so all of you who are here, will also receive a copy of the webinar and the slides. So you should have should be able to easily obtain that. Worst case scenario, if you don't see any of those things, shoot us an email, reach out to us, either me individually or our account support or any other contact information we have, and we'll make sure that we can get it to you. What's the URL to sign up? We will share the URL to sign up for the newsletter. What we'll do is when we circulate the email with the content, we'll include a message about how to sign up for the newsletter, because it is a monthly newsletter and we have a lot of good materials. Thank you. Nolan on our team just shared how to subscribe to our newsletter on our website as well. Well, I hope everyone has a wonderful day. Hang in there. Rough time for the sector these days. We're here to support you, and whether it's tipping or not, we'd love to talk to you. So hope everyone has a wonderful week.